So we have a panel on insurance technology and applying deep tech in insurance. My provocative statement, if I may, for starters, is that some say the application of deep tech in insurance is a desolate state of collection of unsuccessful use cases. Actually, in fact, we don't really see a lot of applications of technology in insurance that really makes a difference to the business, and we see a lot of experiments. So my question to the panel would be, my first question would be, how would you define deep technology or deep tech, and what are some of the applications in the insurance sector today?
Well, I'll start, and as the representative, the sole representative of the insurance industry here, it will be my very difficult task to defend, at times when appropriate, insurers when it comes to the use of deep tech. There's no doubt that insurers are behind. When it comes to the definition of deep tech, we were speaking off stage, and some of my panelists joked that insurers will say they use technology, they're all using computers, and that's true, we generally do that. I have a rather clunky laptop. But deep tech is obviously more, and that's where we potentially are missing a trick, but where there have been some promising developments. So deep tech is really to us that which has a real capability to change, not just to refine or improve, but to alter the way that we do business, and to use that buzzword to potentially disrupt it. Now, it's very hard to ask the large insurers, some that have been very well established and well entrenched, to disrupt themselves. But I think if they take a look at the banking industry, for example, they'll see that there is an absolute need for that. And I think we are seeing that, although it's very early days.
Okay.
All right, there you go. So I represent the property technology industry, so an adjacent one, PropTech. When we think about insurance and we think about deep tech, I think when I think about deep tech in particular, it's about revolutionary transformation. That term should not be used loosely. There's a lot of smart technology out there, and there's nothing to be ashamed about it. It's changing the way people's lives are. But deep technology is not about evolutionary change using existing tech. It's about using R&D to have a revolutionary change. And you're seeing a lot of that in adjacent spaces to insurance. So things like clean energy or health, for example, you're definitely seeing a lot more happening there. So I'd say for insurance, the question becomes twofold. I think one, where are there examples of good deep tech within the core industry? And then perhaps more interestingly, where are all the ecosystem partners producing deep tech? And what are some of the benefits that can accrue from there? So for example, in health insurance, what are all the major changes that are happening to improve lifespans, et cetera? And what are the implications on the insurance industry and how are they using it?
May I ask, what is now deep tech? Is it not a specific technology? So AI, would that be deep tech if it's applied to disrupt and transform the insurance business? Or is it only narrow tech, if it's narrow AI that's just used to accelerate or improve the current processes? Can you give an example, or somebody give an example what the difference is? And is it certain technologies or the application of technologies?
I think what changed over the last 2 or 3 decades is that in 90s or early 2000s, if we were thinking about technological revolution or digitalization, we could probably say, yes, I'm digitally matured, I implemented SAP. And in fact, that means that many of the solutions were implemented once they were tested and well embraced by the industries. What changed and what I perceive as a deep tech revolution is that currently different sectors, and that's looking broader, not only at insurance, tend to experiment with different technologies which are not yet established, like AI, computer vision, blockchain, because they believe it will give them competitive advantage. And suddenly technology started to be a part of strategy. It's no longer an enabler or optimization factor. It's a part of strategy. So for me, deep tech would be this interesting part which adds to this strategy. The question is whether we are ready to embrace that. And we were discussing just a moment ago that if you go to the stand-ups area, probably 90% of startups are focused on banking, and probably just 5 or 10% are focused on insurance. That's meaningful.
Yeah, so I understand deep tech is actually more the application, i.e. the use case, and it's not a specific technology, if I may summarize like that. Are there any good examples of cross-industry application of deep tech? Have you seen examples where technology was disruptive? And you could think of using, for example, predictive and prescriptive analytics to prevent a loss or a disease, or in that case, in healthcare. Rosaline, do you know any?
Yeah,
examples?
so that's exactly what we're doing. I used to run an insurance company and I used to run a broker, and I tried to convince them to move towards technology, but they didn't. So I finally left, because what we're trying to do is not wait for someone to get a disease or cancer, be hospitalized before they benefit from insurance. We're actually trying to do early detection and then disease prevention. So we've connected the whole ecosystem, and we're running diabetes trials now to reverse diabetes. So we're aggregating the best of breed in the world, people with track records. So why wait until they're hospitalized before they're helped?
So that's basically using big data as a technology, predictive analytics, to predict a disease and then to interfere, improve the situation. Is that correct?
It is. We're working with the National University of Singapore, their School of Public Health, where they built scientific models based on the Singapore population of what's happening over the next 50 years. So we could predict, based on people's blood tests and their claims and their lifestyle, when will you get this and what should you do now? So we are using lots of data to do that.
And is your focus beyond improving the underwriting? Is it to improve people's life also?
It is. It is. So companies hire us. We've won 600 different companies because they're trying to lower costs by improving the health of their employees. So how do they do that? Using existing money. Mm-hmm. So we're just moving overlapping money, because there's so many dual income couples, to shift it. So that is the impact we need to have.
Excellent. Michael, you work with drones, and drones are a technology. You could also call them a gadget or whatever. How can drones, for example, improve insurance, or how can they be applied as deep tech?
So of course, drones are just a buzzword, because it's about a combination of drones carrying different sensors and being able to capture data, and then advanced analytics or AI to analyze this data. And what changed, in fact, over a couple of years was that if you think about corporate insurance, about construction sites, about agriculture, about assets, in like 5 years ago, you could either send an inspector to see that, but it was in Africa or somewhere very in dispersed places that was difficult, or you could use satellite images. But satellite images, unless you're in North Korea, are not as available as they should be, because there's only 1 or 2 satellites crossing above us, and if there is cloudy weather, you cannot acquire your data, and besides the size of the pixels, so the quality is not good. Nowadays, you can dispatch a drone or fly the drone within minutes or hours, and the quality of data is amazing. You can get up to millimeter precision, a very sound name of digital twin. There's something which is already quite applied in the infrastructure, power, energy, utility sectors, where these companies are using drones to generate 3D models of the infrastructure, very accurate, with this millimeter accuracy. And we're speaking about hundreds of kilometers or thousands of kilometers of infrastructure. So we have this technology which is available. We have another technology which is AI to analyze this data. But in fact, we don't see so much of applications within insurance sector. Another example is construction sites. In the US, if there is an injury of young worker at the construction place, the cost for the insurance company can get into $10 to $15 million along the lifetime of the person, because of the health cost and healthcare benefits. And the current process is that there is an inspection by the white van. Person gets twice a week or twice a month into the construction site, whereas you have technology already available when you can fly the drone, generate ultra-precise 3D model of this large construction site, even if it's like 10 kilometers to 2 kilometers if it's like a road construction. And then you can apply AI, artificial intelligence, to understand whatever is on the construction, so identify concrete, cement, whatever, and then cross-reference that to the health and safety regulations. So in fact, within minutes, you get a report not about this particular place of the construction site where the inspector was able to get, but about 100% of the construction site. And as an insurance company, you can know if everything was compliant or not.
So is this already applied in insurance? So is it used for underwriting or prevention, or is it more experiments still?
So what do we see? We work with different industries, and I would say that industries like power and utilities, oil and gas, or even mining are more brave in implementing these solutions into daily operations. Within insurance, we see that insurance likes to experiment, as you said, like a proof of concept, but then they sit and watch. They are not so very keen to implement it on a large scale. And underwriting department is probably our worst enemy in that case.
I can kind of confirm. But still, we are not moving away from the notion that insurance is behind. Harry, can you help?
Well, I think you are seeing some interesting solutions. So within prop tech and using insurance, we're seeing in certain countries, we're seeing people sort of using technologies such as smart homes, for example, to be bundled into the property insurance. So when you buy an insurance cover, essentially you also lease out smart home equipment, things like sensors, cameras, etc., which allow you to be a little bit like what Rosaline put it. You can be a little more preventative. You can see that water leak that happens before it causes catastrophic damage. You begin to get alerts in advance. So those are sort of smart ways people are using technologies that exist out there and bundling them into insurance products. You're not seeing enough of that, frankly, yet, because the mantra within prop tech is what we're calling scalable personalization. What that means in simple English is you're using technologies like artificial intelligence to understand what your property needs are. And we understand, for example, the two of you, your property needs are probably very different from each other. And so we need to be able to match the correct property with each of you. We're not seeing yet sufficient examples of this kind of customization within the insurance products. So even though we'd sell you different properties, essentially you wouldn't have the same level of granularity of customization for insurance. But I see that as a great opportunity, because I think it's still very much possible.
Yeah, and to that I would say that Harry is probably using the wrong broker if he's not seeing that level of customization. But I accept the point. There is that in certain lines in particular, there has been a standardization. It's a difficult challenge because in cyber insurance, the area in which I work primarily, there are several divergent products, and in some corners there is a call for standardization. Users want certainty. They want to understand exactly what is in that policy, and they want to know that it's consistent. But then at the same time, you run into this lack of different options, lack of a customizable option. So there does need to be a middle ground that's found there. In the defense of insurers, I will say it's a heavily regulated industry, unlike tech. There aren't as many regulatory sandboxes set up for very well-established insurance companies, although in places like Singapore, particularly in the area of cyber insurance, there has been a move from the government to really support initiatives in that space there. Cyber presents a particular challenge because the data simply is not big. There is no big data to play with. So that's where we do see real-time threat intelligence coming in to help underwriters better understand risks. And I think, to Rosaline's point, we're seeing more offerings around not merely risk transfer, but around that kind of proactive security, red team testing of systems, so ethical hacker engagement, more innovative approaches to managing risk, but work to be done certainly on the traditional lines.
Okay, so that's interesting. There seems to be a lot of possible use cases and applications. They are not really used to the degree they should be. I Googled yesterday evening and I found out that at some point in history, insurance used to lead the pack in applying technology. So to your point earlier, that is obviously a couple of decades ago, I think like 8 or so, but 8 decades. But what happened then? Where did insurance miss the wave? to still be at the foreplay of applying technology?
So my view is that because insurance companies use agents and brokers, I was a broker, so they don't actually have direct information on customer needs. You're using an intermediary, so you're not there at the last mile. And if you're not there at the last mile and everyone's not giving you their notes, right, all you're doing is pricing. Also, you're organized in such a way that every single product is a different division. So it's not based on client segments, but based on products. So I don't think they're there. I mean, I was in banking 30 years ago when we moved to relationship managers versus the product specialists, and I had to make that evolution. So we understood customer needs, and we built everything based on a customer, and what else can you sell to them? So insurance has yet to evolve there.
And there's one point which is critical to understand. I think it's the culture that exists within technology companies. And I've been a lifelong technologist, and the difference between technology companies, pretty much any other industry, is one is the customer centricity, which does exist in many industries, but this appetite for continually innovating, continually changing, continually questioning the status quo is sort of baked into the DNA of the company. So starting with the chief executive all the way through the company, people are incentivized to question, incentivized to challenge the status quo. I understand because of regulatory needs, it is tougher, but that is one of the fundamental reasons why you will miss some of these leaps in technology. Where for a tech company like us, if we miss one leap, it's critical we get the next one. Because otherwise, if you miss two, you're pretty much dead. And that's sort of the reality. Versus, I don't know if that existential threat or this perpetual paranoia of this nature exists within insurance companies.
Just a brief right of reply, if you would. Just to Rosaline's point, I think it's a good one, and I think it's interesting to see that where tech has been embraced in the insurance space, it has been in personal lines, so health insurance, motor insurance, where there has been more time pricing, as I think the last panel was speaking about, and more rapid feedback. There has been more information sharing, which happens more readily at the individual level. So I agree, and I'm sure insurers would agree that they would benefit from having more information. The fact that they don't have more information is not, as I see it, it's not a product of the broker relationship, and it's not a product of them not wanting that information. If you've ever asked a client to fill out an insurance proposal form, it is like pulling teeth, and getting any more information is simply impossible. So I think you get the insurer, you get the insurance partner that you deserve in some ways. If you are more open, and if the industry is more open, or industries broadly are more open to sharing that information, the products can be more customizable. There can be more of that collaboration.
Okay, but I think Rosaline has a very strong point. All tech companies I know, they argue they work really from the customer experience backwards. And insurance could do that without more information. So if you look at young customers today, they're very different from what customers used to be like, 30 years ago, 20 years ago or so. Think alone of motor insurance that is changing a lot, especially in big cities. Singapore, who needs a car? So couldn't that be done a lot easier? And aren't there new possibilities driven from technology, new possibilities? Michael, you have a comment?
Well, to be honest, I'm sometimes surprised that insurance is getting so slowly into. Maybe it's, I think we were discussing this point, that they have kind of different strategy. They prefer to wait until the tech company will grow enough to be acquired, and they acquire and integrate. At the more corporate insurance side, what I see or I hear very often is that, in fact, this cost is already calculated in the product, so why we should change the product itself. And what I see with the other industries, they're getting more data and they're using that, and not really telling the insurance that they have now much better information about their assets. Think about the fires, these terrible fires which are currently occurring in California. There will be a lot of companies whose assets were also prone to fire, and there will be also a couple of companies which will be questioned if their infrastructure was not the reason for the fires, like energy distribution, for example. And I'm sure that a number of landowners and maybe insurance company will be looking into some court discussion with this owner. So if I think about that, you could use drone technology to fly over this asset, even monthly, it's not a huge cost, and apply analytics to understand whether all the insulators were in place, all the covers were in place, or the wires were not loose. So then it gives a little bit of information and completely new dynamics to this discussion. But I don't see much of the activity on the insurance side. There's a lot of activity at the industry side to apply this technology and get information. Unfortunately, not on the insurance.
So let's talk about the struggles. If we focus on technology and maybe deep tech, is it a technology game? We discussed customer, we discussed a little bit culture, but if you focus on the technology alone, do insurance companies struggle with technology? Should they do that differently? Should they partner differently? Should they outsource more? Should they even go into the cloud?
I think if you look within fintech, for example, if you look at things like deposit accounts, payments, etc., a lot of the most disruptive technologies that are displayed in the hall outside are coming from first principle thinking. They're not taking an existing solution and digitizing it. They're sort of starting from saying, what is the problem we're trying to solve? What does the customer need? What are maybe the economics of that flow? And how do I optimize that given all the technologies that exist today? So there's a terminology for it, which is digitalization, where you completely change in a digital world. I see very often within insurance, but also in some other areas, for example, mortgages, it's more digitization, which is essentially you take a very analog thing and you make it digital. So instead of checks, you scan a check, for example. That is digitization. Sure, you don't have a physical check anymore, but that's hardly disruptive. That is just very incremental thinking. So the question becomes, again, I'd say, you put it nicely in the beginning, how are you thinking about the technology and the process flows within insurance? And are you really questioning that? Because if you're doing digitalization, that's what you're doing. You're looking at the technologies, perhaps using deep tech within your company, but also just understanding how to change the flows for the customer.
Okay. I think we get some questions from the audience. Let me try to read that. It's very small. That's probably how about implications of deep technology on insurance. Example, how might gene editing tech like CRISPR potentially unintended consequences impact insurability? I think there are more examples in life insurance. That's probably a good one for Rosaline. Impact the life or health insurance landscape. Yeah, I think we will see that a lot, that technology unintendedly impacts insurance. We'll see this with self-driving cars. Motor insurance goes down, 40% of the business is gone, or a little bit less because you have to insure the software. But health is a more critical one, Rosaline, I think, because there's also society involved as a whole. How would you see that?
So I think a lot of people are afraid of insurance company getting more data, because what if they don't insure me if I have some type of disease? And that's, I think there's a major trust issue, which is why I do see tech coming in the middle and having intermediaries play a role, because there is that mistrust. Will you charge me more if I get sick? Right? So I think and I work with a lot of insurance companies because they borrow my tech. I'm now working for the banks where they use our tech to cross-sell insurance through their entire enterprise commercial base. So we're filling a role that was never there. If insurers or banks never built this, what is not there? So it's crossing over that trust issue with technology and making sure there's data privacy, that is always anonymized and aggregated, and not, will you charge me more because I do have a disease?
Just on this question from in the space that I'm at in cyber insurance, this is a huge question for insurers because it is a relatively new product. At the moment, insurers' loss ratios are reasonable, which is to say it is a small but a profitable line for them. They pay out slightly less than they make. including operating expenses. However, they are all very nervous, and none of them are writing as much or as enthusiastic about it as they might be because of the huge risk of accumulation. So what if we see deep technology fundamentally change the way that companies do business, and suddenly they're all relying on the same platform or the same technology to do that business? They all hold cyber insurance policies, and then a bug, an exploit is found in that platform, and it affects businesses everywhere. That becomes a catastrophic loss beyond the scale of the fires that we're seeing in California or the hurricanes that we saw. It becomes a huge accumulated catastrophe loss, and suddenly you probably have some insurers go out of business. So that is the risk that you'll see a lot of them looking at.
Yeah, but what we have here is a couple of challenges. One is the age-old segment of one issue, that if you know your risk very well, you don't insure if you don't have a risk, and if you want to insure because you have the risk. So I probably wouldn't insure for fire in California, so I don't contribute to that, and where I live, there is no fire. Same like health insurance. If you narrow that down, somebody will get cancer, and you cannot avoid that for now. Maybe tech can help at some point, but for now you cannot solve that problem, and then one person is uninsurable and other people don't insure themselves for cancer. There is a problem, and the trust issue is not the only thing around that. I think for some things there is not yet a solution, or what do you think?
Well, I think that in fact technology also drives need for new thinking in insurance. I like your example of autonomous cars. So it's a question of liability and then of insurance. So if we have an accident where two autonomous cars crash together, how can you say which computer was guilty and who's liable and whose policy should be used? Or the same with drones. And I think there's a number of questions which may, once the insurance industry will start answering them along with those you said on cyber crimes, it will also push the industry to change and to embrace the technology.
Okay, there are more questions. Let me see which one to pick. I think the first one is actually already quite good. If you could edit the DNA of the current insurance industry, what would you change? Can I get that one? Well, I think working a lot with and for insurance companies, the one thing that is probably the biggest problem in my eyes is the culture of the organization. I think insurance companies, as far as I know them, they don't lack money. So I worked at a very large insurance company, one of the largest, and some people even said, we don't have money like what the Googles of the world have. That's not true. They have enough money for everything. They also could hire the talent. They can't retain them very long, usually. But the culture is a real problem. There's a lot of risk and fear-driven culture, what I saw at insurance companies. And if somebody has a really, really good and disruptive idea, and usually you don't know if it will work or not, that's the nature of a disruptive idea, then that creates more fear than ambition to try it. So that would be my answer, but there are probably more answers.
So I think, given we are in, sort of in the fintech festival, the technology companies that are really innovative out there are very clear on the values, the principles that guide all their actions. So there's a lot of emphasis on culture out there, which is right, because that's sort of the thing that's visible. But I think, to your point, if they wanted to actually change their DNA, they need to start with what are those bedrock values, and start there. Because start with their employees, start talking about what kind of company do they want to be. Because unless you actually start questioning those values, everything else is sort of like a Band-Aid on a gushing wound. You're not going to actually fix anything. So you need to start at a very fundamental level, talk about the stuff that the company is really proud about themselves and the things that really aren't working so great in their own minds. So if you start with a little bit of introspection, I think it's actually a good place to start thinking about evolving your DNA.
Do you see any more strategic challenges, like in terms of technology? Because insurance, as we said, is not really the most advanced in tech. Are there challenges that need to be fixed before they can move? We had the discussion in the speaker launch before, and where we said, okay, today you could use a credit card to build a better IT than most insurance companies have, just using some of the hyperclouds, and that is kind of true. That's what startups do, right? They build a super IT, and is it something that also needs to change as a fundament for innovation, or is this overrated?
I don't think the insurance companies, I mean, now recently, a lot of them are starting labs. But most of the labs, to me, are digital lipstick, right? You build a new front end, but you haven't transformed your business or looked at the end-to-end processes to make an impact. So, it's on the surface, but there are a few insurance companies that I think are really making changes, but they don't have agents because they're afraid to cannibalize the agent's money, right? The last time I presented at an insurance company, the agent stood up and tried to push me off the stage because they said, what you're saying with personalization and all this data will lose my job, so why are you here? So I think there is a culture of fear of pissing off their agents.
Yeah, and if I were to edit the DNA, I'd just make sure insurance companies spend a whole lot more on public relations, because it's obvious that the reputation has taken a bit of a battering, and I don't think that's fair. Largely, I do think bad experiences obviously stay in the mouth. That taste stays in the mouth longer. So we've probably seen individuals having bad experiences with certain insurance products that taint the way they view the industry. In terms of investment in technology, I mean, I can only speak for Aon, and if it's digital lipstick, it is the most expensive and engaged lipstick there could be, because we have our own Centre for Innovation and Analytics that does an excellent job of corralling the data that we have and drawing some useful insights for clients from that. Obviously, I do work on the broker side, so our interest is client-focused, and those solutions are client-driven. I understand the point around connecting insurers to clients, but it becomes a real conflict of interest there, I think, if you don't have somebody, an advocate in your corner.
So Aon is a role model, I understand. I think there's a good question for Hari. The first question, do you see a company like PropertyGuru partnering with insurance companies? I think that's even a broader question. The partnering and collaboration question is interesting.
Yeah, no, I think in general, if you see the thing, and perhaps a little bit of context, I promise I'm not selling, but I think what's important to understand is PropertyGuru runs property portals in 5 markets in Southeast Asia, but we also run the largest property CRM that developers use to sell new projects. That's a B2B product that most consumers aren't aware of. But the way we think about it, it's a B2B2C, meaning consumers are going to get benefit by working through the sales teams of developers or through trusted agents, right? Essentially through our technology. Now, what we are trying to do is become this trusted advisor and help someone through their entire journey, all the way from when they're browsing and dreaming about real estate, all the way through to transacting. So a big part, our universe is Southeast Asia. And in ASEAN, access to financing is a big issue. So in markets like Malaysia, you have 60% home loan rejection rate. So if you can't get a home loan, you can forget about getting people into homes. So financing, making a confident decision given all this complexity, I think insurance is going to play a big part in that. So I think the question for us becomes more, we are ready to work with any partner that's going to help that consumer make a confident property decision. I think insurance very often in the property context comes in right at the end. It's sort of a bolt-on. You're done with everything. You've incurred all these costs, and then suddenly, to your point, Rosaline, you're sitting in front of an agent who's saying spend some more money. And unless it's mandated by the country, or by regulation, very often people will balk at that and say, why do I need it? Versus if you've already gained that trust and they've been part of engaging in a conversation, you could totally see that someone would engage with us or with our software, not necessarily about the brand PropertyGuru, but with that B2B software, and say, I've been dealing with this all the time. It's going to surface a product. But then it comes down to that customization. Am I going to just still force feed them a standard product?
Can the B2B2C business model also be a limiting factor because it needs a lot of trust from insurance companies because a startup can ultimately owning the IP and then ultimately the customer also disrupt the insurance company and make them less or irrelevant actually?
I'll just comment briefly and then others can. But I think from our perspective, see, we are in that's our ecosystem. Our entire universe is helping someone through a property journey. And that B2B2C is clear understanding that some things can be moved completely online and some things actually need offline as well. Property is the largest asset class in the world. And it's actually going to be super hard for it to move exclusively online. So we felt adding more efficiency, more transparency, more trust to an offline process is also an effective way to help consumers, but also agents and property developers. Now, go back to insurance companies, it all comes down to the data sharing agreements. Now, people are very, very averse to getting personally identifiable information shared across certain places. But there are other kinds of data, browsing data, et cetera, which I think consumers will be more tolerant to that being shared.
Okay. I would like to take the second question, because I like that one. How can small or local insurance companies with limited resources survive when richer multinational insurance companies start to embrace deep technology and go flying soon? I think that's a good question, but I think there's a clear answer, I hope.
I really like the question because, in fact, we're getting to the moment where we should identify the issue. Because I think we all agreed that insurers, at least the large insurers, put a lot of resources into R&D, and that's the fact. We also know that there is a number of insurers acquiring startups, and that's a fact. But then why the industry is still not in the forefront of innovation? And that's probably because of the change management. That would be my hypothesis, that probably the large insurers are not the best in change management. And that's probably because there is some lack of different factors which will push them. In telecoms in Europe or in energy sector in Europe, the factor which pushed the companies to innovate was the pressure from regulators on the cost basis. So simply the energy companies were told, and telecoms were told, that they cannot charge clients more than, and then it's getting lower every year. So they had to innovate. So now another factor which I see, there was a very interesting Bloomberg study on how AI will impact our jobs. And they made a review of over 200 types of jobs with the prediction how quickly and how many of those jobs will be turned into AI. I'm coming from the audit consulting firm, so unfortunately the most prone for this is auditors, will be the first to disappear, but the second one will underwriters. So if we combine these facts, the not very efficient change management, a disruption which is coming, probably the small insurance companies really have a place to disrupt this market.
Yeah, I see actually part of the problem that when it comes to these large insurers and large insurance brokers is that we are, by definition, we're not nimble organizations. We don't have the same agility that a small or a local insurance company may have. So if we wanted to partner with an insurtech company that was doing something in Singapore really interesting in this space, there might be a whole series of internal machinations that we would need to go through. Where I see the potential for smaller companies there is to not have to go through all of that red tape, to partner with them, do something small but interesting and game-changing, and then go from there.
So I spent 5 years every year trying to convince a New York-based firm to put a little bit of money in Asia, right? You guys are so big, and every year for 5 years, I had to go through 100 people. No one can say yes, but everyone can say no, right? So got up to the CEO. We just never got a yes. So all I asked was $10 million. You guys are so huge, but little did I realize it would be my $10 million. I spent my $10 million and built the startup. And what took us 5 years to beg, I could build in a month. So all I had to do was convince my husband, right? So it was faster. But look, I don't know if a big company can learn to move that fast and make decisions in minutes, right? And move. So we spend all our time on execution, not on debating and learning what Asia's doing, right? So look, how can you change a big company with that type of culture?
So the answer would be it could actually be even easier for smaller local players if they have the right ambition and move fast and have the right culture and agility. Good. Moving on, my last question actually would be, what needs to change for the financial sector or insurance companies to keep up now, to catch up with technology, and what are good survival strategies? And the last question within those three is, what is the next deep tech innovation not to miss out this time?
Well, I won't be so bold enough as to say what the next innovation will be. I think particularly for the large insurers, the sleeping giants, not sleeping, they're focused on other things, but those large tech companies that dominate the space have looked at insurance, have dabbled there, but they haven't made a significant move there. While they haven't, insurers can continue doing what they're doing. If they do, if they really invest heavily in insurance, particularly in the personal lines, that is going to radically alter the landscape. It's already a landscape that is under significant economic pressure. You'll probably see a couple of insurers merge in the next little while. Certainly a couple of brokers just did. So it's a under pressure landscape as it is. If large tech companies get in there and shake up the game, that will really put significant pressure on. So what needs to happen is an embrace of insurtech and fintech, probably more at the startup level, to actually insulate these companies, to provide the solutions that they need so that it doesn't look like it is ripe for larger companies to get involved.
Isn't the biggest asset of insurance companies actually to understand regulation? Because if you talk about the big fintechs who moved into or tried to move into insurance and all moved out, best to my knowledge, they did this because of regulation. They fear regulation like hell.
Yeah. I mean, I think that's a good point, is that one of the challenges that insurance companies have is also something that defends them from disruption because of that regulation.
So, I mean, I'll sort of take the last part of your question around disruptive technologies. I think I'd start by saying, I gave you that example of, using IoT in smart homes. There's a lot of the previous generation of disruptive technologies that insurance companies could start with. So whether it's artificial intelligence, we talked a little bit about drones, implementations of IoT. I think I'd start there. But if we're really saying that we need to have a lot of consumer data out there, and yet we need it secured, and to Rosaline's point, we want to inject trust, one of the technologies that's on the horizon right now is distributed ledgers and smart contracts. So I'm not entirely convinced that the current generation of blockchain is going to solve everything. It's kind of like the first generation of the internet. It's kind of fun for a few people, but it's not really there. But I do believe that distributed ledgers as a technology are very compelling in terms of injecting trust, as well as speed. Because if you have smart contracts that just auto provision, auto payout, for example, that's another part which people are concerned when it comes to insurance companies. The point is, when stuff does happen and it goes negative for me, I'm going to have to sit there and run through and jump through hoops and all of that, having to prove something when I'm already going through a fairly stressful experience. So I think that is an interesting technology to look at.
Yeah. I think also coming back to my initial statement that at insurance companies, applying technology is usually a collection of unsuccessful use cases. Last year I was on a panel with one of the most well-known researchers in artificial intelligence, Columbia University, and the CEO of a big and very well-known bank. And in the panel, the CEO of the bank said, well, we did big data, but we moved on, we do AI now. And that confused the AI researcher a lot because big data is the foundation for AI, obviously. And I think this kind of reflects that insurance companies tend to collect buzzwords. So they have a head of blockchain, they have a head of big data, and nobody has a team, nobody has a budget, and they have a head of machine learning next to a head of AI, because that's very different, obviously. And they have to move on from that to creating something, building something like startups try to do. And then it doesn't really matter what tech it is. And I think the recommendation for the next tech is implement it, not just put the buzzword.
So the people I'm watching is Jeff Bezos. He and Berkshire and JP Morgan are coming in and trying to fix the unfixable, which is the rising cost of healthcare. So I think we're going to see something there, right? Because healthcare has risen faster than inflation everywhere around the world. But if anyone can do it with data and the supply chain, I actually think that's the place to watch.
We have a last question, I think. Do you see any insurtech applications for reinsurers vis-a-vis insurers? That's probably an interesting one too.
So I'm working with a couple of reinsurers. They invested in us, and we're building health scoring. So we score each person. You get a health age versus your real age. If your health age is much older, you have some bad habits, right? So when we score each company, we can predict the chronic disease, and we can also predict the pricing for the next 3 years. So we're opening up transparency to each company to say, here's what you can do. If you can reduce the weight, or the blood glucose by this much, these reinsurers will guarantee a lower price. So we're working together right now because we have the data and they have the pricing and they're willing to take the risk. So we are working with them to move to dynamic pricing and have companies be able to encourage their employees to get healthier and have an outcome. So we're tying those up now.
For reinsurers, are there other business models or use cases that could work out, leveraging their data or being a trusted platform, things like that? Do you see that? I think trusted platform is something that is used a lot, for instance, in the automotive field, motor, because nobody trusts nobody. The reinsurance company could play a role there because they could be the man in the middle of the data, and they just could argue that I have an interest that mobility is safer, not only that this or that insurance company makes more money or the automotive company owns the data or so. So there are also use cases based on technology actually that are thinkable for reinsurance companies. So I don't know if we have more questions. If we could probably take one max. There are more. The future of cyber insurance, that's good, we have an expert here. What's the future of cyber insurance? How can insurers grow this business and how to customize policies? Yeah, that's a tricky one. I think there's not really a lot of data, and also it's a lot challenged by technology because tech is changing cyber risks also a lot.
Yeah, well, I'll speak very briefly on this one, and I'm happy to speak for hours on it afterwards. But all I'll say is that the work that we've done has shown, and it's a common knowledge, I think now, that intangible assets, information assets are valued much higher now than the tangible assets of the company. So we've talked a lot about property insurance and about property assets, but I think as more and more companies recognize the value that they have in their intangible assets, the value they have in their reputation and in keeping their business online, cyber insurance is going to boom to the extent that it can protect that. And I think more needs to be done to communicate to organizations how the role that it plays in protecting that.
Okay, thanks a lot. So if there are no more questions, comments, I would say please give a big round of applause to our panel. Thank you very much for being here, and see you.